Okay, so another week of craziness that we went through last week. We saw a lot of market movements, a lot of volatility in the markets. The currency market it went through a lot of highs and especially a lot of lows as well. So we're doing another weekly video where we not only review what happened last week, we also look to project into what's going to happen this coming week as well. This session, we have Scott from Australia joining us in this session. I'll get him to share more about his ideas and how he trades and what he does later on in the video. But for now, I'll get Kenneth to share with you about a review of what happened last week. Just let me unmute him.
Hi, everybody. My name is Kenneth here. So about some sharing of last week. It's a very good week last week. So on the Monday on the US, right, there's a Federal Reserve cut rates from another again of the cut rates. So from this 1%, from 1.2 to 0.25%, causing a USD to have a slight weaken during the major currency during the first hour. And on Monday as well, New Zealand dollars against the USD and ZD USD, they also does a cut rates. So they cut their interest rate by 0.75% from 1% to 0.25%, causing NZD USD to get down by about 70 pips during the market opening. And on Thursday as well, there's cutting rates as well from Australia. There's the Reserve Bank of Australia cut interest rate by 0.25% from 0.5 to 0.25. And there's additional measures to aid the Australian economy. So on Thursday itself, Bank of England, they also do the cut rates as well. So Bank of England, they cut rates by 0.15% from 0.25% to 0.1%. So the whole week of last week is all about cutting interest rate. And for US CAD, right, it's more on the crude oil price plunge from $21 per barrel. So it's like the lowest in the more than 10 years, leading into a weakness of this Canada dollar. So I'd like to share the chart from our trading view from last week. Yep. So when I'm talking about this New Zealand dollars from the first, is from the last Monday chart that we share it on our Trading Asia. And it went down, break through the support and went all the way down to another support level. And same goes to Aussie dollars. Breaking it down all the way up until here. And there's another support level over here if you take a look at our latest block. And for pounds, after the rates cuts on Thursday as well, bunching it down. And for US CAD, will be going it further upward. Yep. That's all I have for today, and I'll be passing it back to Jim.
Great. Great. So I think we lost Scotty for a while. We'll try and get him back later. It was a good sharing, Kenneth. What you notice is that currently the markets, we see Aussie, we see Kiwi going very low. We see pound hitting multi-year lows. We see CAD hitting multi-year highs. One of the questions that I've been getting a lot from students is, how do we start drawing our support resistance lines? How do we start putting in the next levels higher or the next levels lower to know where are we trading towards? One thing, you could look further back. You could look further back and try and find out where's the next lowest point to put a line. But in the case of Aussie, that might not happen quite easily. In the case of Kiwi, it might not happen quite easily as well. So what I would suggest is start looking at maybe 100 pips away. Start putting in it's not really a support resistance line, it's more a reference point. It's a reference point where you put in a line there at least give yourself an idea of where could the next, you know that it's not going to drop forever. So it's a reference point of, hey, get out there, it's 100 pips away, it's somewhere you want to target a take profit towards, rather than thinking that you'll get into a trade and it's going to keep dropping all the way. So it's a reference point at 100 pips or 150 pips away, just so that you can have a more realistic trading target rather than expecting to trade it all the way down. So that is one quick tip I wanted to give you about how to draw your support resistance lines. I just got a message from Scott that he's lost some connection, so he'll join us later again. Oh, there he goes. In the meantime, I'll get, hey Scott, you back? Okay. In the meantime, I'll get Daniel to share about his trade ideas that he's been signaling for the past week, the performance of how he's been going. I haven't checked the numbers, but I think we've been doing very well in terms of the signals. So I'm quite happy to get Daniel to share on his fantastic trade signals.
Okay, hi. So so last week I sent out about 6 signals itself, but the total month to date, it's about 80% success rate. So it's pretty good week, the month as well for this week. So this week, as Kenneth Jin has mentioned already, there's a lot of surprise interest rate cuts. So it's a very interesting time to trade and to give signals itself. So let me share my screen. Okay, so Canadian yen, it was really fluctuating. Just previously was, you can see in the 15-minute chart itself, although the long-term 4-hour trade was a downturn, but it was fluctuating quite close to the support, the support resistance, support level of 76.8 itself. So, and there was a surprise on a Saturday, Bank of Canada actually carried out emergency interest rate cut of 0.5 by 0.5% as a proactive measure in light of the coronavirus and the sharp drop in the oil price. Oil price have been due to the trade war, or trade price war with the Saudi Arabia, Russia itself. So we have, so you see then the sentiments itself is pretty bad itself. So what happened was, with the worsening condition of the coronavirus outbreak and the continued drop on oil price, you expect the Canadian dollar is likely to weaken against the safe haven, especially the US dollar or the yen itself. So when you see, if you will look at the 4-hour chart, Canadian yen has always been a downtrend. It has been trying to, and then it broke in 15-minute chart. It broke down before and then went down, and we tried to retest the 76.8 zone resistance, become a resistance level, and then it's continued to drop down. So once it dropped out of my zone area, which is here, about 76.5, I decided to issue a signal to sell the Canadian yen. So let's see what happens. So you can see when it closed up, when I sent a signal out, it actually went continuously down all the way. Okay, you can see that there were 2 possible exits moving. All the while it was within the Bollinger Band itself. I let it run, but there were 2 possible exits that you could do. One is at a TP2 level. At 15-minute chart, it actually shoots out of the Bollinger Band. So if you're monitoring using a 15-minute chart, you could actually exit at TP2. But as I get signal in the 1-hour chart, so I have decided, and you're still in the Bollinger Band, I decided to let the trade run, and it actually went all the way down to TP3. So hooray, very good. So the other one we have is the New Zealand USD. Quite interestingly, I was actually monitoring this New Zealand USD pair itself. You can see it's actually a very consolidated area, and the Bollinger Band was very, very tight itself. So I was expecting a breakout soon, especially if all the while it has been below the 0.6 this resistance level as well. So, and again, on a Sunday, or we can say Sunday or early morning, Monday, the Reserve Bank of New Zealand actually issued an emergency 75 basis point cut rate in response, again, the same thing to the coronavirus pandemic. And also, they also very interestingly, when you read, they mentioned that the interest rate will remain at this level for at least the next 12 months. And one of the statements also I read was that in addition, the Bank of New Zealand Governor Orr mentioned that in the press conference that the central bank is ready to manage negative interest rate. Although they will not go to negative interest rate yet, but if they need be, they could manage it. So it tells me that they don't look at they are looking at the market for New Zealand dollar not so positive, right? So I'm looking at it to be weakened. So despite so you can see all the coordinated central banks, they've been doing it, Canadian card rate, US card rate, the New Zealand dollar card rate, but there you can see that in the investors' mind, actually a lot of the sentiments actually going to drive the investors to safe haven currencies such as US dollar, yen as well. So with the New Zealand US dollar has been downtrend, following the downtrend, and also it's been below the 0.6. Previously it tried to break through, but it did test, couldn't break through the resistance level of 0.6. And with this kind of news, and at a point where I see the trade going down, further down, breaking out from the tight Bollinger Band itself, I've decided to sell the signal trade of New Zealand USD at 0.5940 itself. And what happened was that, so looking at this, it actually drops. It went up a little bit, and then it dropped all the way down to TP3 itself. This is a 15-minute chart that you can see it's actually outside of Bollinger Band, but because you can see it's a very strong drop itself, and one hour chart is still pretty good, the downtrend. So I decided to hold it and see how it goes, and actually it hits my TP3, and I'm just very happy to do that. So overall, two signals shows that the sentiments, market sentiment fundamentally, it's actually weakening for the New Zealand dollar and Canadian dollar last week. That's why I have decided to sell to the safe haven currencies of the US dollar and the yen. Yeah, that's all for me. Thank you. Jean?
That's great. So, well, I wanted to check with you as well, Daniel. How many trades did you signal out last week?
Last week, actually, 6, 1 loss, 5 wins.
Okay.
1 loss, 5 wins.
That's fantastic. Great. Thank you for that. So, we had great trade signals last week. We were looking at, in general, and what we were looking at was a move towards reserve currencies, especially in the US dollar and the Japanese yen. We saw massive strengthening of the US dollar and also the yen. So it was very good trending markets in terms of in that aspect. And we actually saw not just in our trade signals, but also in students' performance, that students who were trading with the trend and who were trading, well, rather conservatively in such a volatile market, were generating fantastic results and seeing their kind of returns that they were expecting as well. So now I'll get Scott. Scott's joining us. The first managed to get back onto the system. I'll get him to share with us his views and do an introduction of himself as well. Off you go, Scott.
All right, thanks everyone for joining me, and thanks to my guests as well. Thanks, Jin, for the opportunity to do this. I'm Scott Andrews. I'm a performance coach with the Chinese Olympic team for speed skating as a strength and fitness coach, but I also have traded the markets for several years as well. So it's a bit of an interesting story that I have. And I love the markets as well. That's probably my number one passion, really, to be honest.
I can see that with all the videos you've been doing, the weekly videos, the updates you've been, and how much we've been catching up online as well. Just this is why I really wanted to make sure that I could get you onto this call and to share with not just ourselves, but with all our students as well on how you look at the markets and the things that you do as a performance coach as well.
Yeah, look, it's an absolute pleasure as well. And Daniel and Kenneth as well. I was following the signals as well. They were great. It was just, it made a lot of sense too. And I guess from my perspective with trading, especially right now, with unsettled markets, you've just got to be aware of yourself. And I like to think of when I'm trading at the desk, I want to be looking down on myself and thinking, Scott, is this really the best thing to be doing? Like if I was, caught up in watching the Aussie dollar or something or gold, and I'm just, frantic and it's moving a little bit, you're like, oh, this could take off. And I think what I've found it works best for me is less screen time is best, just personally. And I have to accept that, because if I force myself to sit for a long time, it ends up, I just start seeing things that aren't really there,
That happens not just to yourself, it happens to almost everyone that trades. They sit there, they get anxious that they're missing out on possible opportunities, and they start forcing trades. They try to think that by entering a trade, the market is going to move, but it doesn't happen that way. We're more likely supposed to be trading only when the market starts moving.
Exactly right. Now, we discussed before recording about gold and my thoughts on gold as well. And obviously, that's currently with how uncertain things are, and we discussed S&P down. I mean, these markets are just wild, and it's a little scary. But what I will try and do, I did cut off as well before. I'm sorry, I'm in Perth, Western Australia. I love Australia, but the internet is. Goodness me. All right, let's just have a look and see if this will work, everyone. All right, I've just shared the screen there, and I've got my gold chart up. And what I like to do is just to get a little bit of higher time frame perspective.
Hang on, give us a moment. Yeah, it just came up.
Yeah.
Okay.
All right, excellent. Okay, so look, where it currently is, and like you said, Jin, with not forcing a trade. So right now, during this time of day, it wouldn't be a very active trading time for me. And it's interesting. What I will do is wait till later on into the US session and just see what the US dollar is going to do, because the markets haven't been rational. It's been very uncertain, but gold has just been heavily liquidated.
Yep.
With what we're seeing is just panic, absolute panic. So if we have viewers here that are watching and love trading gold, which, it's a nice pair to trade, but right now it's a little bit messy. And if we go to just intraday, we go to the 1 hourly time frame. This helps just let everyone know how I would formulate a plan. That's very flat. I'm more of a conservative type trader, so I don't like to get in without enough information. I mean, look, it's hovering around 1490 or so. It's not doing enough to excite me to get into anything, and it's flat. We'll see. We can all you see everyone posts signals up and everything about, jumping in early and this and gold to 2000. But then you see on the other hand, some people say gold's going to 1000. So what I did notice though, I just sometimes I like to broaden out my research, is that Perth Mint, which gets the gold from up north here in Western Australia, they're out of a lot of gold. So people are purchasing physical gold, but this chart doesn't necessarily reflect the physical gold market. So, it makes sense that it would be long because of how uncertain things are, but the markets haven't really been rational. If we have a look at where the S&P is, it gapped down over the weekend.
Mm-hmm.
So it's like, we just have to wait. So just wait. I'm not going to be trading gold right now. I mean, it is over. I've got a support area at 1487. It's hovering over that. But I just like to see some sort of move with some conviction before I, will say I'll be in. I mean, I don't get in full size right now. I'm like 0.5% per position. So that's my take on gold right now.
So what I'm hearing is your bias is more an upwards move, but you're looking for more information towards that upward move.
Correct. Yeah. Yep. That's right.
Great. I think you've really showed us your thought process in the trades, and I have the same view. But on the other hand, although I see it as an upward move, I don't think that it's going to be very sustained, because a lot of people think of gold as a safe haven, as a hedge, but at this point, I've read reports that it's not exactly one of the best safe haven hedge at this point in time as well. So we could see it move. I feel that we could see it move higher, but with limited upside, quite limited upside potential as well.
Yeah, I agree. Because these big hedge funds are facing margin calls with their positions in the stock market. So you're right. Upside potential is limited. We could see more selling. I mean, the coronavirus is just unprecedented right now. It's closing. I mean, Emirates stopped flying.
Yeah.
It's just, it's unbelievable. So be very careful, everyone, is what the overall theme is. Be careful, but be opportunistic. But I agree with gold. Upside potential is limited.
Awesome. So apart from gold, what else are you looking at?
Okay, well, I can't help myself. I love looking at the Aussie dollar. I just find myself, it's not the most, traded market and things like that, but just looking at what it's doing currently right now, I have obviously traded the Aussie dollar a little bit, and I've shared it in the Forex Trading Asia group.
Yep.
I got in here when it was sort of breaking through 64.80, and oh my goodness, I just got... I got out. I got out for a few hundred pips or so. I was like 200. And look at it now. To me, I was just unsettled. And I should have just detached myself from it. And look where it's trading at now. It's back in 2003 levels. So if you go to the monthly time frame, I don't know what to say, and that's a bit of a messy chat. I'll go back to the daily. But it's just, if we go, right now, there's no real clear signal for me. It did bounce nicely, which was good to see. At least there was some bullish interest, but now it's faded away. And just looking at that, it looks like it's exhausted, and it looks like it might be selling it. But again, it moves a lot slower, the Aussie dollar. So it's a little bit more boring for people who don't mind markets moving faster. Like gold obviously can, during the US session, move. It can surge or it can fall quickly. So Aussie dollar short biased right now with no clear entry right now.
Good. One thing, if you can help me bring it back to your daily chart, I found that quite interesting. So one of the things that you actually mentioned was you got out at a trade at 100 plus pips, but then it continued down. It continued down significantly, a lot more, which you have no idea how many messages I received from students and clients going, how could we have maximized on this trade? A lot of people got out at 100 pips, or even maybe 200 pips, but everyone's messaging me going, Jin, how could I have taken profit at 57 rather than 62? And one thing I want to really reach out to everyone and tell everyone is I believe that we can't ever maximize a trade, because we never know when a trade will be at its maximum highest point or maximum lowest point. So it's really having that understanding that you get into a trade, you get your profits, you're satisfied with the profits that you have, you get out, and then you reevaluate. You think about whether you're going to get in for another trade, or whether you go, hey, I've just done enough. This trade might go further, but you might not think that it's something that you want to take the risk upon. Because at 57, it's a 2003 lowest point. If it does bounce back up, it's going to bounce back up very, very strongly. And a lot of times people who try to get to the maximum end up not closing for profit, and they end up closing for a loss because they try to hold it to the maximum. It rockets back up, and then they go, oh shit, should have got out back there. They got out for a loss. So one thing I like the point that you brought up, and that's why I really want to harp on it, is, if everyone would be a lot more profitable if they didn't think of trading to the maximum point. Think of trading as your daily targets and your monthly targets, and then be satisfied, have a reasonable expectation, and be satisfied with the kind of returns that you're getting as well. Do you agree on that?
I do. And Daniel's two charts that he had really summarized that well. They were very realistic targets, and the stop was tight, but it was a sensible stop placement. you're just going with the market flow there. You know, like if you be too greedy, what typically happens is the market will bite you. Like if you keep forcing, like it can go further and further, like you said, Jen, and then it will violently reverse, because that's what we've seen recently in the markets, where especially at so low, look at some of these wicks on the day. And that flash crash that it's just unbelievable. So if you can lock in some profits, be sensible, make some money, and just move on to the next trade instead of, you know, because it will really cause a lot of frustration if you are in a winning position, then it bounces back aggressively. That could really unsettle you for the rest of the trading month, where you're emotional, you're on tilt, and then you know, that could really ruin a month, and you could make bad decisions because you're emotionally foggy. You're sort of revenge trading, and it could really spiral out of control, to be honest. So I agree completely with that.
All right, good. I'll actually put Daniel on the spot now. I'll mute him. I'll put him on the spot and throw a question at him that he's totally not prepared for. Let me unmute him now. All right. So, Daniel.
Yeah.
Why 30 pips stop loss and 60 pips take profit at levels 1, 2, and 3?
Okay, so basically it's set up because usually we've seen that based on statistically, based on the movement of the prices itself, 30 stop pips is actually pretty safe itself. It can hit the stop loss, but I'm going for actually a 1-1 or 1-2 kind of risk to reward, you know, and I have a high chance of hitting all my stop take profit itself. So that's where the profits all will come in. And usually in the trades that I monitored and look for, it's actually quite a intraday kind of strategy. And when we look at it, I think based on what we always do, getting some profits in like 20 pips, even 40 or 60, it's pretty good for within the day, where the fluctuations can be like some of the pairs 100 pips a day movement, or 150 itself. Getting a portion of it, of the profit, and going according to your plan, I think that's the best way to do.
So how do you address the issue that you might be risking 30 pips and making a 20 pip profit? So, you know, your risk reward is not going to be exactly positive that way.
That's true. So, but the thing is, my hit rate is actually pretty good itself. More than as right now, it's about within 70. This whole year is about 70 to 80% profits itself. But usually, I will tend to monitor at TP1. If the TP1 itself, I think there's momentum, still more to go, I will still actually hold the trade itself. Or if you like to be, some people like to do a trailing stop, putting it down. I prefer not to, because I like the movement of the volatility to be moving. But some people, if you want to reduce your risk, you can actually bring it down to the break-even point for your stop loss itself, and then let the profit runs itself, or you can just get out at TP20. So with the 70%, 80% hit rate kind of success, because when I give the signal, it's more or less it's a very conservative and high probability chart of trades itself. So there is a good chance that you still make a profit by the end of the month.
Mm-hmm. Fair enough. That was great. Yeah, I've been looking at the signals, and we really have been hitting quite a high percentage in terms of the results as well. So Scott, any other currency pairs that you're looking at?
Look, one more. I'll just touch upon the euro, and this has been quite interesting. Now, just looking at it from the 4 hour now. Okay, so this has been okay. So we still haven't really seen it. I mean, right now it looks like it's sort of bottomed out, but it's continued just to move lower, and I'm sure this has really frustrated people. Because it's been just trending, and obviously people love to take the bottom and get a nice value reversal. But just looking at this now, look, right there on the 4 hour looks interesting to me, but it's going to have to do a little bit more. If I'll go just to the daily time frame now and just see. Okay, that actually has some promise. What I'll do is I'll watch that candle, and then I'll see how it closes on the daily. And then that has some significance to me. And then from there, I'll continue to monitor into Tuesday and just see what happens in the European session. And then we'll go from there. But, you know, it's just, you have to be aware, like if you get into something like this, it's almost like you're jumping in front of the train. You've got to, you know, good risk management, and just, you could have a great value trade with the bounce, or we could see more US dollar strength, which you know, it doesn't make sense that it's so strong, the US dollar, but it's just been happening. And you just have to, as a trader, adapt and go, this is what's happening. I've got to do what the market is doing. And it can be quite confronting, because you're just like, it doesn't make sense, but you just got to do what the market sort of throws your way. So we'll see with the euro. Right now, that actually looks interesting for a potential long, but I'll wait till this daily candle closes before, you know, I'm just watching it right now. It's interesting, but it's not offering any entry quite yet for me.
So what are you looking for in terms of the daily candle to confirm a potential buy trade?
If it could close like this right now, without much of a wick, if it could close near the high, I would like that. And then I would then wait through the Asian session. I mean, if you wanted an aggressive entry, and if it was holding up during the Asian session on the 1 hour time frame, I would watch, like into lunchtime, you know, Singapore time, or even a bit later, like leading into the European session. You could get in for a 0.5% entry, and then if it breaks out high, add to that. I never like to risk more than 1% per trade. So that's how I would potentially play. But conservatively, I would wait until Tuesday night and just to see really what it does. And I mean, that would give me an idea of what the US dollar is doing as well. You've had one full day of trading, and then, you know, the US session on the Tuesday. And, you know, just looking at it right now, though, it would make sense that it would rally, but things have been so crazy. It's just like, it's confronting nearly.
I think I'm looking at it. I'm thinking anything above 108 might trigger quite a flurry of buys. But I'm in the same view where it really looks like it's US dollar strength at the moment. So even if it goes up above 108, I might get in for a quick trade, but it's not something that I would hold on and think that it's going to go back up to 1.14, that kind of thing.
Yeah, agreed. Yeah, a quick trade, something like that, where you can, you know, get something and then just get out and just be like, okay, and then pause and then reset and then see what happens, you know, in the coming days potentially.
Awesome. So one thing that Scott mentioned was, you know, we were looking at US dollar strength. Actually, I've been saying this quite a bit through the couple of weeks prior, was that we would have seen US dollar strength right now, but how I feel of it is actually more in relative terms. So it's not really US dollar getting stronger. It's more like the euro, it's more like the pound, it's more like the Aussie, it's more like everyone else getting weaker, which in turn make it look like the US dollar is getting stronger. Because if you sit there and think, should the US dollar get stronger, there are really no reasons why you would think the US dollar will get stronger. The economy is not doing great, you know, the market's crashing, gold is not doing fantastic, the virus in situations is starting to hit, or has really been hitting the US and globally as well. So to really look at a fundamental reason why US dollar should get stronger, we would struggle, you know, but looking at everyone else getting weaker against the US dollar, that's why we see the US dollar strengthening in relative to everyone else. What do you feel on that?
I do. You're right. That's the thing. Who is the weakest is the question. It's like there's no overwhelming strong economy at all. And it seems the market has picked that the euro and everything that's going on right now in Italy and Spain, and however you look at it, it seems that the US dollar is where people are going. So you just have to say, okay, that's the situation, and that's what we've got to do. So I agree. That's right. It's the battle of the weakest economy right now, which is, you know, not great, but it's what we're dealing with currently with the situation.
Exactly. So I'll get into a bit of the overview of what's likely to happen in terms of the fundamental news coming up this week. I'm looking at my Forex Factory, not much happening. We do have a schedule on the 26th of March on Thursday evening, Singapore time, where the Bank of England is likely to make a decision on the interest rates. But given their previous surprise interest rate cut, interest rate is currently at 0.1%. Are they likely to reduce rates? We never know. Right now, everybody is more likely to reduce rates than to keep it on hold. They might reduce just for the sake of reducing. However, what we've seen is that central banks cutting rates has not given the kind of results in the currency that they expected. Cutting rates has not weakened the currency as much as they expected. Let me throw this over to Kenneth. It's another surprise question to him. Kenneth, what do you think in terms of the pound and the interest rate decision on Thursday? Are they likely to cut? And also, if they cut, what do you think is likely to happen to the pound? I'll unmute you now. You can share your views.
Okay. Regarding for the pound, right? I feel that now the whole world is in this kind of coronavirus and a lot of uncertainties in the markets as well. So for more of what I'm seeing that due to there's a lot of things happening in the UK as well. So previously there's Brexit and now the coronavirus and everything. So I'm actually looking into a more weaker side of the pound against the US dollars. And moreover that there's a lot of things happening over there as well. So this much of the view that I currently have for the pound US dollar. Yeah.
Awesome. Okay, great. So, I think we'll try and wrap it up here where, we've got quite a good review of what we had last week. We had Daniel sharing his trade signals. I'm very happy to manage to get Scott onto this call. Let's hope to try and get you onto more calls, try and be a weekly feature if you can. And also, this week is going to be quite similar to last week, I feel. We're going to have a lot of surprise happenings in the market. We're going to see a lot more volatility. The prices are all at major multi-year lows or super highs. Is it going to continue in that direction? Most likely, but I feel that we could see quite a strong retracement, either upwards or downwards before a resumption of the trend again. So with that, please remember to trade safe. With the higher volatility, it's not a time to go gung-ho and to trade twice as big. It's actually a time to reduce your lot sizes, be a bit more conservative, accumulate your profits, not go for that one massive trade thinking that you're going to hit the jackpot. Because you could hit a jackpot, but you could also go bounce backwards and affect your trades significantly as well. So please, if you have any feedbacks or comments, or even if you really want to join in, be like Scott and join in this call and share some trade ideas and walk through, we can do a discussion as well. Please let me know and I'll be happy to get you onto this call again. So thank you guys for your time. I really enjoyed this discussion that we had and I hope to catch up with you all again.
Bye everyone. Thank you very much, Jen. Appreciate it. Thanks guys.
Take care, man.